Hey, how's it going, guys? It's been a little while since I've done a YouTube video because I've been focusing on course material for InvestorShare. Now that I've got it all mapped out and the curriculum that I want to improve on with the courses, I can actually start paying more attention and focusing on the YouTube videos for you guys as well. So I'm gonna try to bang these out once a day for you guys, Monday to Fridays, so you can prepare for that. And I'm also going to start implementing live events as well. I'm not sure how often I'm going to do it, but if you guys are interested in live events, please put a like on this video so I can see whether or not you guys are interested in that. That way you guys can ask me questions directly and I can help answer them through the live event on YouTube. So yeah, we're combating resistance to try to bring us into a range. During the last video I posted, we broke that resistance and we hit our 30K target. And the top of the range has not yet been met. Most likely because of bearish reactions that we're starting to see on the DXY. Bullish for the DXY, bearish for Bitcoin, sorry. And we're starting to see the S&P 500 as well, which is fairly correlated with Bitcoin's price action, is starting to see bearish reactions as well. And it may look bullish for you on the charts right now, but I'll show you why it looks bearish on my side. But yeah, I'm going to dive into the charts, show you what I'm preparing for on my side, so maybe you guys can have that correlate with your trading strategies as well. All right, I'll see you guys on the inside. All right, so let's go to the not the S&P 500, the DXY first. So the DXY, oh, my bad. Here we go. So we were looking at the DXY before. We were tracking this downtrending level of resistance, and we still have been keeping up with this resistance and honoring it until today. So today we can see that we've got a strong bullish engulfing candle close near this level of support that we were being mindful of before when we lost this uptrending momentum. And now we are preparing for basically an uptrend. So we broke this downtrend, now we're preparing for an uptrend. But the first thing we want to break is this 102.613 level right here. This could weigh us down, and if we get a rejection here, then you're likely going to see bullish reactions on the Bitcoin chart as a result. So before in the past, we had it act as support, and resistance, and right now we might revisit and have it act as resistance again. And you will see a bullish reaction on the Bitcoin chart in confluence with that. If we get a rejection here and we create a higher high, then we can start tracking uptrending momentum, like we did right here. So we had uptrending momentum right here that we could follow. And once we lost this uptrending momentum, it was an early warning sign that we're likely going to revisit levels of support. So when we lost this, we had this candle here, warn us that we're going to go down, and we came back up, got a confirmation rejection off of it, and we just kept going down after we lost all these levels of support. And now we're revisiting these levels of support as resistance. So here we'll prepare for a potential reversal here, here, and here, while mapping out and tracking uptrending momentum like we did right here. But we don't have a level where we had our first rejection yet and created a higher high in order for us to track that kind of momentum. So right now we're just reacting to the first level of resistance and see how Bitcoin is going to react and how the DXY is going to react to it. If we end up creating an uptrend and we revisit this neckline, there are two things you got to be aware of. The first thing is this downtrending level of resistance that we've created since we've been exhausted from this crazy pump from all the funding rates, right? Once we lost that, we defined this downtrending level of resistance that could halt the DXY from going any further higher up. Even with this uptrend being formed, this uptrend could define a double bottom structure, and the double bottom technical target is up here at around 110, but we have this downtrending resistance that could prevent us from hitting that 110 target. So you might see a lot of weird fake outs going on during that time when we combat this level of resistance for like Bitcoin and altcoins in general. So just prepare for that, because this is going to influence it in a very weird way. So we got, just so you guys are aware of how we got that 110 target for the double bottom structure, you just pull it from the support level here and the resistance level here and the support level here, and you just drag it and put it on top of the neckline, and that's how you get your technical target. So that's the technical target of this double bottom structure if we get above this level of resistance. So the reason why we're seeing bearish activity on Bitcoin right now is because we're seeing bullish activity with DXY. So just prepare for that mentally. Going to the S&P 500. So before we were talking about, we broke out of this macro descending broadening wedge, and these have a technical target of the top of the formation. So that's a pretty big target considering how long we've been going down this downtrend. But that's just the target we have in mind right now for this macro formation. And then we had the confirmation breakout, and we created a confirmation formation. And this confirmation formation was also a descending broadening wedge, which is bullish, and the technical target is the top. So the technical target has been met, has been hit with this little wick right here. So we hit that bullish structure, and this formation dictated the confirmation bounce that we may actually continue to hit this macro target. But right now, short term, it does look like we're getting exhausted. So people who entered off of this descending broadening wedge or got in on during this confirmation bounce, we had a double bottom there, are beginning to take profits, and it's reflecting on the charts as a rising wedge. And the rising wedge is usually caused by traders have the inability to create a higher high, and the volume is getting lower, and they're becoming less confident, and they're starting to take profits of previous formations that they're in, and it results in a rising wedge like this. And the technical target for this formation is the bottom of the formation, so kind of oppositely correlated with the descending broadening wedge. But when we break this to the downside, the technical target is the bottom formation at 4,070. However, we have this local level of support that may prevent us from hitting that technical target at 4,087 roughly. We had honored as support here, resistance here, support, resistance, support, and you can go on for a while here. So this is actually a relatively strong level of support. So we break this, prepare to undercut the masses that are preparing to take profits here at around here. So that's what I'm preparing for with the DXY. And because the S&P 500, the S&P 500 is relatively correlated with Bitcoin. So if this breaks to the downside, then Bitcoin may see more bearish activity also continue going to the downside as well. But when we come and break down and we get a bounce here, we may build a more stronger formation. Hopefully we don't get rejected off of this level at around 4,130 roughly. The reason being is because we could create a head and shoulder structure if that were the case. But we'll play it as we see it first. We're just going to react to the rising wedge structure first, act off this, make some profits until we get down here, and then see what the new formation that's created, whether or not it's going to dictate us continue going to the upside or continue going to the downside. So that's the S&P 500. And let's go over to the total market cap of crypto as a whole. So here we're talking about this range. We're trying to combat and get our way in it. And in confluence with us breaking this, Bitcoin also broke its range and got inside of its macro range as well, where it traded sideways for a long period of time. Now, if we get caught in here for, I think it's going to be roughly around 30 days before we actually escape this, whether it be to the upside or to the downside. But we can use these levels of support and resistance that we created on the total market cap to help dictate or define whether or not we're going to break it to the upside or to the downside. So if we lose this uptrending momentum here, we may break it to the downside, or we could just consolidate further while being mindful of this level of support. Or if we break this to the upside, then we could continue going up higher and likely hit our macro target for Bitcoin at 48K. But yeah, for now, we are just caught inside this area, and the longer we're caught in this area, the more likely we are going to trigger a altcoin season. So prepare for that as well. All right, so going over to Bitcoin. So Bitcoin right now, short term, there's a long position opportunity right here. So looks like we're creating a fishhook. And if you guys aren't familiar with the fishhook, let's zoom in on the hourly for a second here. A fishhook formation is normally defined by us losing a strong level of support and having a large drop and revisiting the next level of support. And we normally will get a bounce off a strong level of support and come back up about 40% of the drop. So we're almost, I would say about 40% of the drop is going to be right about here, where this downtrending level of resistance is going to be revisited. And then we'll create the fish hook structure from that. And this is where you prepare for closing your long position if you're looking at the micro time frames, like 15-minute, because we just got a defined break of the 15-minute downtrending resistance. And if we entered off that, you prepare to close around here. And if we get a rejection here, fish hooks tend to be the left-hand side of a double bottom structure. So what I mean by that is, like, this is the fish hook. We get rejected here, and we may come back down and revisit the support level, and it could give us the momentum that we need to break this resistance. And then we can get an early entry off of this once we get an hourly or a 15-minute candle close above this downtrending resistance. You can use it as a confirmation for a breakout, and you can enter off of that, and you prepare for closing your position right about here at the first level of resistance at 29,860. So that's like a short-term trade that I'm looking for today. I'm going to be able to play that out today as well. If you're a part of the community, I'm going to let you guys know as well when I decide to enter. But yeah, this is what I'm looking at right now, short-term. So here, technically, you can enter along once this candle closes and prepare to close it at the top right here, which will come in confluence with this downtrending level of resistance. But for me, I'm waiting for a larger structure. So when we get this rejection, then we may create that double bottom I was talking about. However, if we get a candle close above this, then we can enter along as well. But no matter how it happens, I'm preparing for a break of this resistance in the 15-minute time frame. Let me just fix this a little bit. There we go. But if it ends up happening around here instead, around here, where I'm hoping for, you're going to have a worse risk-reward ratio, unfortunately. But yeah, guys, that's pretty much it. If you guys have any questions about this, you can reach out to me in the Discord. I'm going to be preparing for live events on YouTube. If that's something you guys are interested in, please like this video, and I'll compare the percentages of the amount of people that liked it to the amount of people that are watching it, and I can use that information to tell me whether or not it's a good idea to do live events for you guys, where you can ask me questions real time on YouTube. But yeah, have yourself an amazing day, and thanks for watching. Appreciate it. Bye, guys.